Okay, sorry about that. Apparently we're starting over on another video. So let's get the, we've got the supplies recorded in the accounts payable, and then let's get the cash recorded from the revenue, and let's set up revenue. Okay, apparently I timed that out some way. I'm going to have to learn how to not let that happen again. Okay, so now let's go to May 22nd. Received cash for programming services to be performed. So in other words, someone came up and paid us in advance, at least part of it, which is pretty common because a lot of times you say, well, we can't start that big job unless you give us a little cash up front to help us defray the cost until it's done, and then we'll bill you the final amount. So that's actually pretty common. So we got the cash in advance, so we've got to increase cash, but we haven't earned it. So we need to put it in a liability account called unearned revenue. And think about it. It makes sense. We have to credit something. We can't credit revenue. We haven't earned it yet, and it makes sense that unearned revenue is a liability because we owe people, we either owe them the work or we owe them their money back. See what I mean? So it is a liability. Okay? Okay, so I've got that posted, the journal entry made and posted to the T accounts. All right, two more, 525. Paid the rent for May, $1,300. Well, we're in the month of May and we're paying the rent for May, so we're just going to expense that and call it rent expense. Now, this is the first expense that we have recorded in this problem. So let's talk about expenses for just a minute. And it's the operative word here is that it said paid. That means we wrote a check, which decreases cash. Now, a lot of times you think, why are expenses debits? Expenses are not good. They reduce your net worth. They reduce your equity. Assets are good. And when we debit those when we increase them, how could an expense be like an asset? Well, here's the thing. Remember that in the accounting equation, assets equals liabilities plus owner equity. Remember that owner equity goes up when you experience revenue, and it goes down when you experience expenses. That's why revenue is a credit. Revenue is a credit because it increases your net worth. Think of it that way. Think of equity as your own net worth. Expenses are debits because they debit against your net worth. They reduce your net worth. So we debit expenses and we net those expenses against the revenue. And hopefully, if revenue is more than all the expenses, we end up with a credit that can be transferred and that increases our net worth in the company. Okay? So that's the way to think about why expenses are debits, because they decrease net worth, which is the same thing as equity. Okay? So let's make a rent expense T account and record that $1,300, and of course record the fact that we wrote the check. Okay, one more entry and then we're going to collect all this up. Billed a customer for programming services performed. So in other words, we've done the work. Hello, why is this? I don't know why the autofocus isn't working. Autofocus. Okay. We've done the work, and we're going to bill them, and they'll mail us a check. So, in other words, they didn't just walk in and pay us as soon as we did the work. we're going to bill them. We are going to send them an invoice in the mail or email them an invoice, and they will pay us later. So we call this accounts receivable. See how it's the opposite of accounts payable? Accounts receivable is exactly what it says. We've got customer accounts, and they are receivable to us. We will be receiving them. Okay? 500, and it said that we did the work. So we'll go ahead and put that in revenue. See, they haven't paid us yet, but we've earned it. So that's why we're going to go ahead and put it in revenue. So we need to make another account for accounts receivable. I think I'll stick it over here. And we need to credit revenue. Okay? So now we have journalized all the transactions that have happened to us this month. And we have posted them to the general ledger. So now we want to find our general ledger balances so that we can make a trial balance. Because if we have a trial balance, then we can create a set of financial statements. Okay? So some of these are easy. They only have one balance. They only have one transaction. So I don't have to do any netting. Cash, let's see. 10,000 plus 1,000 plus 1,200 minus 5,000 minus 1,300. Let me double check that balance. It looks like cash should have a debit balance of $5,900. See, all I'm doing is adding up the debits and subtracting the credits, and we end up with the debits being bigger than the credits. Okay, $5,900. Supplies are $600. Owner capital is still $10,000. Unearned revenues $1,200. Accounts payable $600. Revenues $1,500. And rent expense is $1,300. So now we can make a trial balance since we have those T account balances. Okay, let's review that again. Cash would be $5,900. Accounts receivable and computers only had one transaction. Supplies $600. Owner capital $10,000. Unearned revenue $1,200. Accounts payable $600. Revenue $1,500. Rent expense $1,300. So now I'm going to make a trial balance, and a trial balance is nothing but a list of all our accounts and their balance. And because we use the double entry accounting system, our debits and our credits are going to balance if we have recorded everything properly. Okay? So I'm looking at my T account, and I always want to start with my most liquid asset. So that would be cash. And I look at the T account, and I see that it's $5,900. Okay, then I'm going to go with accounts receivable. That's the next most liquid asset that I have, because that will become cash pretty soon. And I see that it has a balance of $500. Supplies. Okay, I look at supplies. It has a balance of $600. Computers or office equipment or equipment, you can call it anything you want to, as long as I know that you know it's an asset. Okay? Next, that's it for assets. I don't see any other assets. I'm going to move on to liabilities. I see accounts payable. When I look at accounts payable, It appears that there is just one transaction for 600. Pause, and start again. Why am I frozen?